What's going on, guys? Dan here, Pekoe Mortgages. So I was doing a little bit of digging on interest rates, and obviously rates are up year over year, and it's getting a lot of traction in the news. And no surprise, right? When you see rates increase that quickly and to the point where they are today, it definitely starts to make news. So it got me thinking, well, what happened back in the late 70s and early 80s, and where interest rates were? And more importantly, how was it being reported in the news? So I did a little bit of digging and found some footage that I wanted to share with you guys. Let's first take a look at 1979. This was a news segment that came out on CBC, and basically from the time it was recorded, there was a jump of about 5.75% in the interest rate. So let's check it out, and then we'll circle back, and I'll give you my thoughts.
Record high mortgage levels are starting to take their toll. Many people are putting off buying houses. Some owners who have to renew their mortgages are selling their houses because they can't afford the extra monthly payments. And mortgage companies are making fewer loans. The mortgage rate is at 14.75%. A year ago today, it was 11%. On a $20,000 mortgage, the payment has gone from $192 a month to $245, an extra $53. Wendy Glayholt has been looking for a house in the neighborhood in which she grew up, but she and her husband are going to have to lower their standards because of high mortgage rates.
We started looking this fall. I'm having a baby in January, and we like to look in this area because we've lived here for a while, and it's a really nice family area. There's good schools. And as it is right now, with the mortgage rates gone up to 14.75, we can't possibly buy in this area now, and we've got to look for cheaper houses in a different area, which is kind of disturbing because we'd really counted on this area.
Real estate agents say that people are looking for houses with existing mortgages that have low interest rates. Few Canadians, it seems, are willing to pay for 14.75% mortgages.
We're selling mortgages instead of houses. If a couple are looking for a house at a certain value, they tend to ask me more about the mortgage and the financing than the house. We're featuring mortgages at lower interest rates than the current rate right now more than the house.
The term of a mortgage can be anywhere from 1 to 5 years. When it's up, you either pay it off or renew it, but at the new rates. 80% of Canadians do renew their mortgages. Most people don't have big chunks of cash around to pay off the loan. Brian Telfer has just renewed his mortgage. He lives in one apartment in his house and rents out 2 others. His mortgage went up by $263 a month.
$263 is $263 I do not have to pay. In fact, I have to put the property up for sale. It's the only way that I can manage the situation.
You're selling it?
I'm having to put the property up for sale because I can't make the payments.
One retired couple who had to renew their mortgage this month didn't want to be interviewed because they were embarrassed to let their neighbors know that they were strapped for cash. Their monthly mortgage payment went up by $125. Their old age pensions went up this month by $4.20 apiece. Perhaps older people on a fixed income feel the pinch of inflation and higher interest rates more than do the young couple trying to buy their first house or the middle-aged couple trying to hang on to what they own. Fred Langan, CBC.
So this was 1979, and it seems like we could definitely draw some parallels to what's going on today, right? A lot of conversation on how we're going to make those mortgage payments. Maybe we've got to sell a house. You saw in that video that we had that gentleman having roommates and still saying, hey, I can't make ends meet. $263 a month is too much. So rates definitely went up 11% up to 4.75%. And the sentiment there was like, we got to move out of the communities we grew up in, and because we simply can't afford it. And interesting enough, they were selling mortgages or mortgage rates rather than the houses, because if you could assume that rate, that was a great thing. So we saw a very quick increase in 12 months from 11% to 14.75%. That's how it was sort of displayed in the news. And that was the sentiment at the time that, hey, it's quite high. So let's fast forward a little bit. So 1981, going back to CBC in the archives, I found another video and article that accompanied it. And this time the tone was a little different. So let's check this one out, guys.
Once again, the drop was marginal. The new rate is 17.08%. That's only 6/100ths of a percentage point lower than last week. Chartered banks are unlikely, as a result, to lower their prime rates. There'll be no relief from 15 and 16% mortgages either, although, as Fred Langan reports, those high rates don't seem to be frightening home buyers.
The move from the suburbs to the city. Carrie Hallivan and her husband have just sold their house about 1 hour from downtown Toronto and have bought another one closer to the center of the city. It means lower commuting costs and less time getting to work. But it also means higher mortgage payments, something Hallivan knows about as a loan officer for a bank.
I think if you have to buy a house, if in the area of looking for a house, and that's what the mortgage rates are, what are you going to do? You have to accept it. You have to accept it. And of course it bothers you. The payments are high, but you can't do anything else. Those are the rates.
High mortgage rates mean bigger monthly payments. On a $50,000 mortgage at 10%, the payment would be $447 a month. But at 15%, and that's a good rate today, the payment is $623 a month. But people buying houses seem to be willing to pay.
They just decide that they have to buy a house and they don't pay any attention to the rate. Or they buy a less expensive house.
You think people have come to accept mortgages at 15%?
Yes. I don't think people think that we'll ever see 12, 11 again. Maybe even not 13. They seem to think 15 is good.
A year ago, when interest rates started to rise and mortgages began to climb to 15 and 16%, the mortgage market dried up. People were not borrowing money. But now that has changed. Banks and trust companies report an increased demand for mortgages at 15% and more. That means that Canadians have learned to live and pay for inflation and high interest rates. Fred Langan, CBC News, Toronto.
Oh, wow. Okay. So 1981, we went from 1979, where everyone was leaving the larger cities and moving outside of the areas that they traditionally grew up in, to something a little bit more affordable, to 1981, people moving back. So you heard from Carrie, the loan officer, and she said, what are we going to do? The rates are the rates. And it was a compromise. So we moved back. We got to pay a little bit more, but we save on transportation and time, because time for a lot of people is money. So I think it took a little bit of time for the market to adjust to it. And you can see from the sentiment there, it's like, well, they didn't think rates would go back down to 11 or 12%. The market kind of accepted where the interest rates were. And it was a very different sentiment, obviously, in the news as well, too, that, demand was up from credit unions and banks and trust companies for mortgages. So people were back and people were out shopping and continuing life. Anyway, just some food for thought there, that 2 year sort of span and what happened. I think we're kind of close into the 1979 portion now, where people are a little bit shocked and on the sidelines, but we got to keep in mind we have a strong immigration policy. Rents are through the roof. People need places to live. And I think as people start to get used to the interest rates going back to 5% or so, which historically over the last 30 years, it's about the average on a 5-year fix, then they're going to be pretty much used to it. So anyway, just something to consider, guys. Hope you enjoyed this. If you do, then let me know. I'll do more of these.